Welcome to this lecture. Today we are going to deal with these topics little quickly but in detailed approach. My name is Gunjan Subedi and as always I'll be guiding you in this topic with practical explanation and examples when necessary. Before starting, let me kindly remind you to subscribe to my Lean University, which is my initiative to deliver free and quality professional education to your screen. Liquidity. Liquidity is all about maintaining a healthy cash position. How much cash you can maintain on hand. This is one of the important key performance indicators for a company's success because sometimes, although the asset of the company is high, the business may run out of cash. So when a business runs out of cash, there is a delay in purchase and operations, transportations, etc. And in fact, the entire supply chain is disturbed. We can understand liquidity with the help of term cash conversion cycle or CCC. So what is cash conversion cycle? Cash conversion cycle is the time required to sell the inventories plus time required to collect receivables minus time you have to pay the bills without any penalty. The cash conversion cycle is a metric that expresses the length of time in days that it takes for a company to convert its investment in inventory and other resources into cash flows from sales. So we learned that we can measure the liquidity with the help of cash conversion cycle, and to calculate the cash conversion cycle we need three terms: time required to sell inventories, time required to collect receivables, and time you have to pay the bills without any penalty. We also learned that when you have high liquidity, it means we are in a state of healthy cash position. That means you have cash on your hands. High liquidity is more cash in your hand. This matrix or the CCC, cash conversion cycle, takes into account the time needed to sell its inventory, the time required to collect receivables, and time the company is allowed to pay its bill without incurring any penalties. We just studied that in the formula of cash conversion cycle. The cash conversion cycle will differ by industry sector based on the nature of business operation. We talked about this formula before. CCC is days of inventory outstanding plus days sales outstanding minus days payable outstanding. That means time needed to sell the inventory, time required to collect receivables, and time the company is allowed to pay its bills without incurring any penalties. Let us see some of the important points regarding the cash conversion cycle. These points will help to understand the cash conversion cycle better. A good cash conversion cycle is a short one. If your cash conversion cycle or CCC is low or a negative number, that means your working capital is not tied up for a long time and your business has a greater liquidity. Many online retailers have a low or even negative cash conversion cycle because they drop ship instead of maintaining inventory. If your cash conversion cycle is positive number, you do not want it to be too high. A positive cash conversion cycle reflects how many days your business working capital is tied up while you are waiting for your accounts receivable to be paid. You may have high cash conversion cycle if you sell products on credit and have customers who typically take more time to pay to you. So these are some important points on cash conversion cycle. If you are new to cash conversion cycle or financial terms or financial KPIs, you do not have to worry now because we'll also have some quizzes at the end of this section. So for now, thank you so much for being with me. And with this, we have ended the main financial KPIs. Similarly, we'll also do the customers KPI and operations KPI. So if I try to include all the KPIs in one course, it will be very hectic and it will be very long. So I'll try to cover only the common one and only the key performance indicator that you should look for while you are measuring any business performance. Thank you so much for being with me till this point.
Before ending this lecture, let me remind you to join my Lean University's premium membership and enjoy a total free access for limited time inside my Lean University's online library and get tons of free courses, free books, and lecture topics on project management, Lean and Six Sigma, operations and supply chain, productive and preventive maintenance, quality maintenance, data science, industry and sales management, Agile and Scrum, Kaizen or continuous improvement, and much more totally free. No strings attached. As we have limited seats, only the early subscribers will be given open access inside the premium membership, and remember, it's totally free. Please subscribe and share the video if you share the common belief that professional education should be accessible to all.